So what is a break of structure? A break of structure is that moment at which market broke above or below a particular high or low. Now, what do I mean? If, for instance, let's go back to our chart. If, for instance, we have market moving in such way like this, or bullish move high, low, high, low, right, and like that. Remember, don't forget I said it's coming to take fuel and then giving energy. Now, that point at which market comes to break that previous high, which market that was exhausted before it looks for energy. That point, that high that it got there, if market breaks it above and create a new high, right, it means with market has given a break of structure. Now, a break of structure, market breaks it above with the body of the candle, not by the wick. Please take note of that. Market breaks it above with a body, not by the wick. So if market now keeps on buying, right, after this, it looks for energy and then it breaks structure. It come again, looks for energy, and then it breaks structure. Now, as it is looking for energy to break, looking for energy to break, to go above this high, it means it has break that structure. Now it has break this structure also. That is how break of structure is. Now the difference between it is that there is no break of structure on ranging market. There is a break of structure on uh, trending market. That is the difference. Do we understand? So when you are trading a trending market, also if it is for the sell, don't forget I told you that anything that happens on the buys happens on the sell also. So if market is selling, right, because it has come to the limit, is exhausted, look for energy that is giving a correction, right? That's a correctional move. Look further again, and positive move, which it after it has got energy, it drops aggressively, and then look for another energy drink after it has dropped aggressively and it has exhausted the power. Look for another power to drop back again very well. Now that moment at which it is right, it is dropping aggressively to break that point at which the market has been exhausted, right? It is what we call break of structure. This point, right, was the previous low, right? It is what we call break of structure. This point is the previous low, is what we call break of structure. Do we understand? So that is how we do all of this. So this are how break of structure can be identified. Now let's go to the chart. Let's see um, how break of structure can be identified. Now this is good, right? So on this good, this is good. So we can see as soon as market comes right from here, this is a low, right? Market comes from right here. It moved high to this point, right? And then it comes back to this low. And then before you know, it pushed higher. Now I told you guys that you should forget something. Look at this movement right here. All this movement right here. Right? There's still the movement that came to what? Break this high above. So it is still inside or within that movement. They won't understand. So don't think of that. What about those movement inside? Those movement inside are the movement that is creating that is making the market to move and break that high. So it came from this. Let's start from this low. It came from this low. It got exhausted here, and then after it got exhausted, market did what? Market got another energy. After it got another energy, market break above this high very well, right? That is how it is. Now, as you can see that it got exhausted, you can see this candlestick, which was a bullish candlestick, but market rejected, right? That is market the bears drained it. That bull was weak, and then the bears drained that bulls to the extent that it reject, and then it got another energy, right, and then pushed up. So these are how it works. So again, we've got this high, market look for energy, and then came above again to break it above. Now you can see that market is breaking the previous high, which was a weak high, right? We have a break of structure there, Also, right here, market came back, break it above. It means what we have a break of structure there. Now, this is telling one story, right? That market is moving upward because we can see break of structure, it's up, not down. You understand? The break of structure is up, not down. And then you will notice that it is all closing with what? A body of a candlestick. Let me draw it properly so you can see that. Now it all close with a body of candlestick. You want to also close with a what? Body of a candlestick. Right, that is how you identify a break of structure. Do you understand? So now let's now go to the other side when it is selling. So when market is up, selling, right, you want to see a break of structure to the downside. Okay, let's look for one example when market was selling. Well, let's just stay on gold if you can see a selling movement, or let's go to another chart. Okay, now let's be on BTC. So now let's look for moment that BTC was selling, right? So we can see all we want to see is market come from the high to the downside. So right now, as you open the chart, where did market come from? Do you say from the upside? Maybe you say from the upside, that is you are trading from here, and then you are blind, you are a blind trader. But if you say from right there, you are trading from this point. So if you say market comes from here, it means you want to be trading just within from this point to this point. But if you're trading from here, if you're looking from here, that is you want to be trading just within this point to this side. That is you want to be seeing buys. Do you understand? So let's look for at the moment market was actually selling on BTC. Now look at it right here. Right. Look at what we can see right here. Market drops right here. Reject back. Drop. Look for another fall. Drop. Look for another fall. Drops. Was exhausted. Look for another drop. Another energy. Drop. Was exhausted. Now I want you to realize something here. Right. I just explained that. Is this a break of structure? No, because the next candlestick couldn't break with it. It closed with a wick. It didn't close with a body. So therefore, it is still one, right? It is still the same thing. You understand? Now, when market got right here, that it was exhausted, it pushed up. Now, when it pushed up, this movement that was supposed to drop aggressively was supposed to break it, but no, it did not have the power. That is, it had not taken the energy to break it. So it did what? It pushed up back again. Right, that is this point we do not have a break of structure right here. There is not a break of structure right here. It is not a break of structure right here. This is not a break of structure. The one this is not a break of structure. So this point is the low, right? And then that point make look for, I mean, market look for energy drink or energy food, energetic food, and then drop further again. Now this one, is this a break of structure? No, it is not a break of structure, right? That is, this movement is still caused by this because we have further break of structure below, where you can see that. So now look at it very well. So we have a break of structure, right? Because market came right here, market broke it below with a break of structure. Market came, market break it below right here. We have a break of structure right here. Market came, market break it below. Have a break of structure right here. Now look this point right here. Market came, but market did not break it. We did not have a break of structure. It is still one movement. Market came, it did not break the structure. It did not close with the body. We did not have a break of structure, but rather we have a break of structure right there. Do you understand? We have a break of structure right there. Do we get that now? We have a break of structure right there. So that is how market keeps on. So if market comes after it look for energy drink, after it looks for energy drink or food, and then market begins to, sorry, it looks for energy or food, and the market come back to break this low, it means we're going to have another break of structure right here. So let's see, does market look for the energy and then came back to break that low? If it does, okay, it has not come back. So if it later come back to break this low, so market has already what, gotten energy from this point and then to break this low. That is, we'll have another break of structure. So now you should forget about all this movement. What you want to do is after market break structure, the pullback, and then the what? The long move. That is the impulsive move. Do you understand? So that is how you identify a break of structure. Now, what is now the difference between a break of structure and a change of character? A change of character, as it is named, change of character. That is, that character wants to be changed to another character. Simple as that. A break of structure, it means market is just breaking the structure above. That is, you will see that in most cases, a continual trend. Right? A change of character, it means market wants to change that character. If the character was bad, it wants to change it from bad to good. If the character was good, it wants to change it from good to bad. If the character was bullish, it wants to change it from bullish to bearish. If it is bearish, it wants to change it from bearish to bullish. Simple as that. Now, because let's talk about change of character now. When market is going higher highs, higher lows, higher highs, higher lows, right? That is breaking structures above. Now, you already know this is the pattern they are following, right? You see that market move from this low to this high, come back, go up, come back, go up. Now you notice something, that market did not come back to this point right here, right? Market did not come back to this point right here. Also, market did not come back to this one right here. So what you're expecting now is market should, if market is going to move again and break structure, market should not come back to this point also right here. Right, that is it. So then if market now moves, that is, you are expecting market to drop again, but market should not come back breaking it right to that point. But market now comes and then break it. It means what? Market has changed that character and then begins to sell, right? That is, market has changed that character. So after you see a change of character, you want to be expecting series of what? Break of structure. Am I grappling? Are you grappling, guys? After you've seen a change of character, you want to see series of what? Break of structure. And that is how it works. So if you do not understand change of character, I want you to watch this video over and over again. You can save it or download it. All right, make sure you like and subscribe. Anyways, let's continue. So a change of character means that character, that previous character, or the recent character rather, wants to change to a new character. It wants to get another new behavior. It wants to be moving in another ways. It wants to change its movement. Right now, let's say market is selling. We've talked about buy. Market is forming lower lows, lower high, lower lows, lower high. I want to believe that you know what lower lows and lower high is, right? Because I've explained it in the part one. So lower lows, lower high, right? And then market, you know, this is the series that market is actually creating. And the market now failed, right, to create lower highs and rather create higher highs, because now this high, it will be higher than the previous high, will be higher than this high. So it now formed this. That is, market has changed character. The new behavior is now what? Bullish. You understand? That is the new behavior. So this is how market change character. This is how you identify market change character. So let's go to the chart. Let's see. Let's observe this on the chart. Right? Let's observe this on the chart. So what do we want to see? We want to see a break of structure, right? And then want to see market trying to change that character. So that is, now let's look this internal structure right here. Okay, let's look this. So we have this as a break of structure, market break structure right here. That is this high with the normal market to what? With normal market to come back and break it above, right? This high. So as soon as market comes right here, market go with this push to the downside. Market also break structure right here, right? As soon as market do that, so it means this you do not want market to what? Come back right here. That is, you are seeing break of structure at the downside, to the downside. That is, market is selling. You can see break of structure is to the downside. Unlike the one that break of structure is moving and continue to the upside. So now we now have another break of structure right here. Right here. This is another break of structure right here. Right here. That is, market should not come. I want you guys to see that very well. Market should not come and break this high. That is it. That is, market is selling. Now you have another break of structure right here. That is, market should not come and break this high. This is another break of structure right here. That is, market should not come and break this high. So let me label this high for you. So what the market do? So as soon as market taps into this level, right, and the market break it above, remember that this high is not a point that market has to break. This low rather, I mean this high, market should not break this high. This high, market should not break it. But the moment the market gave this break of structure, we've already seen this another high. That is, we want to be selling from this point right here. So as soon as market now breaks it above, the market has changed that character. Market is no more selling again. And then if market not change character, what do we expect? Market should continue in that new behavior. And you can see what happens. Market begins in that new behavior. That is, after market drop, right? Low, lower high, lower low, right here, lower high, lower low, right? And then market created high, higher low, high, higher high, higher low, and then market keeps on. So you can see, right, that after market did that, what happened next? Market came back. Market came back to what? To continue that bullish move, right? Market came back to continue that bullish move, and that is how it is all seen. Right, market came back to continue that bullish move, right? You can see, and then till it takes out the last high, which market should not take. So therefore, it means what? Market has changed the new behavior to the bullish side. Now, this is the bullish side, right? We have market breaking this point above. So therefore, we want to see market continue to the bullish side. So market keeps on buying, right? Break structure also right here. It's not this week. It has another body above it. So therefore, it means market should not come back to break this low. Now, if market comes back to break this low, what happens? Is it still buying? No, it is not buying, because the break of structure simply means that it is continuation. So if market now come back to disobey that continuation, it means market has changed character. So it means this low, our market should not break it. And then because of we have this break of structure, market should keep on buying. Do you understand? Which is continuation. But the fact that if market now comes, market now break it below, right, it means we have already have a change of character. That is, we want to keep on selling. I hope you understand. So try to watch this over and over again so that you will not miss it out. So this is how change of character works. So the difference between change of character and break of structure is very simple. Break of structure means market continues trading. So but change of character means market is not continuing in that direction. Market is now changing that direction to another direction. You will understand. So that's how you identify a change of character. So let's see more example. Let's see one more example. Let me go to another pair so we can see more examples right on that particular pair. So now let's see gold. This is good. Don't forget we have to see a break of structure. Now, of course, because we can see market had this break of structure, we are selling. Market had this break of structure, we are selling. Right here, we are selling. We have a break of structure right here. Market have another break of structure right here. As soon as market have break of structure, market went up bullish, right? And then it break another structure right here. We are selling, right? That is, market should not come to break this high. So market now gave break of structure and that break of structure right here. We are still looking for sell because the current trend is what we are dancing about. So when market now give this break of structure, are we not supposed to look for sell and market should not break this high? So market now did what? Market now break the high above. What does that mean? It means what? We are buying, right? That we are looking for buys. So as you can see, when market now break it below, market now change that structure that Mr. Man, I'm no more selling again. No, I've changed character, so I want to buy. And then you can see it keep on buying. So now we'll be looking for another what? Another buy to what? To cause another break of structure. Now, if market now disobey this, because this is a break of structure right here. Let me show you. This is a break of structure right here. This is a break of structure right here. Right now, if market did not now come back, if market comes back and then market break this low above below rather, we have what? A change of character, which means we want to buy. Now note, it must close with a body, not a wick. Do you understand? Look at this point right here. Look at this point. If this candlestick hadn't closed with a body, I would not mark this point as what? Break of structure. But it has later closed with a body, so I mark it as break of structure. Do we understand? Now let's take a look at another one. Let's take a look at another one that it is not a break of structure. So I want you to be able to identify break of structure and not a break of structure. So this one closes with a body, right? You can see as soon as market comes, market break it with a body. So it is a what? It is a break of structure. Now this one is also a break of structure. Now it is not a break of structure if this next candlesticks did not close with a body. But the next candlestick that sells, that forms, closes with a body. It means this one has become a what? Break of structure. But if it doesn't close with a body, that is just rejected, weak rejection, it is what? It is not a break of structure. Okay, I think there are more on US oil, which there was not a break of structure at 1 hour time frame. Good, let's see this. Let's see this. Now look at this point. We have a break of structure right here. That is, this high market should not break it above. Since we have a break of structure right here, it means we want to be selling. But now what the market do? Market now came. If market breaks this high above, it means we have a change of character. Is that not it? Right. So therefore, we have this high as what? As our lower high, right? So now what the market do? Market, did market break it above? No, it's not with a body. Now the next candlestick, the market break it above? No, it's not with a body. Now this one to the market break it above? No, it is not with a body. Also this one to the market break it above? No, it's not. So this is actually telling that we do not have a change of character yet. They will understand because they are not closed with a body. It is all weeks, and weeks are what? Liquidity. They are money. We are still going to talk about liquidity. They will understand. So since we do not have market closing above it, it means what? It means we are not changing our bias to sell, sorry, to buy rather, because of that movement. Now look at this one right here. Do we have a break of structure? No. Do we have a break of structure? No. It is what? Weak, right? This point right here. The next candlesticks that formed did not what? Close with the body. Rather, they are just weak. And what happens? We do not have a break of structure. And that's our break of structure. You have to identify a break of structure with a body, not by the weak. So I'm sure you can identify the difference between change of character and break of structure, and then the difference between a good break of structure and a weak break of structure. So that is that very important, and that is that on break of structure and change of character. And then the rules I've given you, that it has to close with a body. It has to close with a body. If it doesn't close with a body, you do not have a break of structure. So let's go into another topic, which is time frame structure. Now, what is time frame? Because of we have different minutes, seconds, hours, day, and different week and month, right? Now we want to experience, right? We want to be seeing what each time, each seconds, each minute, each hours, each day, each week, each month, each year, you understand, is saying about that particular market. So this is US oil, for instance. Now, what has US oil been saying for the past 2 weeks, for the past 3 weeks? Even if I did not hear news that the US oil has increased or has done this, the chart per hour, I will know what happens to the US oil per hour. I will know what happens to the what? To any market per day. I will know what happens to US oil if it is US oil per week, if it is US oil per day, if it is US oil per month. Do you understand? So every month, every market has how they've moved each second, each minute, each time, each day. Do you understand? So what we want to focus on, it is the time frame that you want to trade on. Do you understand? So what time frame do I want to focus on and trade? It's not possible for me to be saying I want to be trading the monthly time frame, because I know that it's going to take a whole month, right, before one candlestick form. Do you understand? It's not possible for me to say I want to be trading a whole year, because I know it's going to take me a whole year. So if I want to see two candlesticks, it means I will wait for 2 years. Have I taken any trade? No, I've not taken any trade, because I'm still waiting. So if I want to see setups on weekly, on yearly time frame, I might wait for at least 10 years or 15 years before I take one trade. Do you understand? And then if I want to take trade on monthly time frame, I'll wait for several months, like 2 months, 3 months, 4 months, 10 months, a whole year before I take trade on monthly time frame. And then if I want to take trade on daily time frame, I'll wait for days before I take trade on daily time frame. So if I want to take trade on 4 hours time frame, I'll wait for 4 hours setups, 4 hours movement. I'll wait for several 4 hours before I what? Before I take trade on 4 hours. Now if I want to take trade on 1 hour, I'll wait for several hours, several 1 hours, right? So that I can take trade on. So that is how it is till the very second, if to the 1 second. You understand? So if you want to take trade on 1 second, you wait for several seconds before you see your structure. So now, if we have different time frame, we have a lot of time frames, right? We have 1 second, 5 seconds. We have, in fact, to 12 months. We have 3 months. We have 6 months. We have a year. We have many years like that. Anyone you want to trade on. So now, depending on the time frame you choose, depend on the type of trader you are. Now, if you are the 1 hour type that you want to just take trade within 1 hour, it means you want to be a day trader. If you are the yeah, if you are the 4 hours 15 minutes time frame traders, it means you want to be a scalper. Do you understand? If you are the daily time frame trader, it means you want to be a swing trader. It's just simple as that. So if you are focusing on the hourly chart, it means you want to take your trade within hours of that day. If you are focusing on your trade on daily time frame, it means you want to take your trade within that daily movement. Now, because I want to take my trade on 1 hour time frame, I want to take my trade currently on 1 hour time frame on this USD. I want to be seeing a break of structure. I want to be seeing a change of character. You understand? Now, there are 3 time frames which I suggest traders to be using. So, using 3 time frames would make you have an edge to your particular strategy. And what are the 3 time frames? Your higher time frame buyers, your middle time frame structure, and what? Your lower time frame for execution. That 3 time frames are the key to what? To Forex journey. Let's start with it with sketching first. So when you are identifying your higher time frame buyers, you want to be seeing how market has been moving. What do you want to see? What do you want to expect? That's your buyers. You can't just open your chart and say, I want to sell today, and then you'll be looking for sale. No. You can't just wake up today and say, I want to be buying, and then you'll be looking for buy. No. In as much as you can't think of, I want to be ranging. So you should not be thinking of, I want to go up, I want to go down. Because you are not the market. It is whatever market does. So if market is ranging, you follow the ranging tone. If market is trending, you follow the trending. They will understand. So if market is going bullish on the higher time frame, it means you want to go bullish also on the lower time frame and every time frame. You don't want to go bullish if market is going bullish and then you are now looking for bearish. It means you are not trending along with the higher time frame. And don't forget what I tell you about trending. When something is trending, it means you are dancing to the current movement, current tone to what is happening, right? So if market is bullish right here, right, it actually means on your lower time frame you want to see market go bullish also on that lower time frame. Now on the lower time frame, market will now form right different structures. So you should not expect market to go the same way as it goes on the higher time frame and then goes the same way on the lower time frame. No, that is why the lower time frame is always much of noise, because you will see many structures on the lower time frame. So for you to filter all of those structures that are not necessary, that's why you focus on what? The higher time frame. Now, if this previous movement right here at the higher time frame, this is how the lower time frame would be moving. Do you understand? You'll be seeing several movements on the lower time frame. Now, what the question is, what time frame should we be using? No, it's not necessarily the time frame you use. The time frame you choose as your higher time frame, right, is where you want to do your analysis. So if you choose 15 minutes as your higher time frame, you want to do your analysis. That is, you want to follow the trend on that 15 minutes time frame. If you choose 4 hours time frame on that as your higher time frame, you want to follow the trend on that 4 hours time frame. If you choose 1 week as your higher time frame, you want to follow 1 week trend as your you want to follow the 1 week trend because it is your higher time frame. They will understand. So it's not a particular time frame that this is the time frame you should use. No, choose the time frame that suits your personality. If I'm the type that wants to be taking trade, I want to take 5 trades in a day. I want to take 6 trades in a day. You switch to the lower time frame because you know that there are many structures that will form on the lower time frame, and then it will not form on the hour time frame. Sorry, on the minute time frame. It will not form on the hour time frame or the daily time frame. So if you are focused on, I want to just take 1 trade or 2 trade in a week, you know you want to focus on the daily time frame and the weekly time frame and then the hourly chart. So you should know that those time frame as what how they form and how they move. So if you are following the trend on 1 hour time frame, it means what you want to be taking trades on. You want your trade to look, I mean, every entry you take should be in line with the 1 hour time frame. Simple as that. I hope I'm communicating. So now if from right here to this point is the higher time frame, right, it means this is how lower time frame will be going. Now you can see how noisy it is. So as a trader, if you are following the lower time frame and then you are selling, you're in profit, and then you forget the higher time frame and then it begins to buy, you will be confused that why is it buying. That's why it is always good to choose an higher time frame which you would understand the structure. If you choose your structure on the or your structural movement or your higher time frame bias, sorry, at the higher time frame, right, it means everything you want to be, sorry, on the lower time frame, everything you want to be following, right. If this is 15 minutes time frame, for instance, and then all of this movement are 4 hours movement, and then this movement is 15 minutes time frame, so everything you want to be following should be on your 15 minutes time frame lower, not 15 minutes time frame higher. So if your higher time frame is 1 hour, so it is from 1 hour to the 1 hour downward that you want to be what you want it to align with. So you cannot make it to align with the higher time frame. No, only if you are following daily time frame downward. Do you understand? So if you want your trade to align with daily time frame, it will be daily time frame downward, not daily time frame upward. Daily time frame downward, that is if daily time frame is bullish, that is you want to see 4 hours, 1 hour, 15 minutes time frame looks the same way as the daily time frame. I hope I'm communicating. So this is how you align the higher time frame. So if market is going bullish on the higher time frame, let's say for instance daily time frame, so you should expect that this movement itself is going to be, this one movement itself, right, it's going to be like a noise, something like this on the what um on the lower time frame. You will see something like this on the lower time frame. You will see something like this on the lower time frame. To understand, if you see on the higher time frame you have something like this, and then if market is retreating, you see something like this on the lower time frame. You understand that is, these are the noises that happens. So if market is going to go to the last up like this, you will see something similar like this. That's how change of character takes place, right? You see something similar like this on the what, on the higher time, on the lower time frame, because you are all following, right? How can I move this? Okay, because you are all following the lower time frame. Now look at how noisy it looks, right? And then look at how simple the higher time frame structure is. So that is how it always looks. So for you to filter all of those noise, that's why we always stick to the time frame that will not give us a lot of noise. Now if this is daily time frame and then this is 1 hour time frame, now imagine how all of this movement on 1 hour time frame, now imagine if you go to lower time frame, how noisy is going to look more. Do you understand? That is every single pull up and down, every single impulsive and bearish, starting from this point, starting from this impulsive move, right? You will see different higher highs, higher lows inside just this one move. Inside this pullback, you will see lower lows, lower highs, like that, like that, like that. Now imagine how noisy it's going to look like. That is why we always filter all of those noise and then stick to the higher time frame for quality setups only. They will understand. Only if your time frame is what is on the if your bias is on the lower time frame, then you can stick to the lower time frame and then use this formula. It is 2 time frame below. That is, if you are making your analysis or you've seen your bias on the higher time frame, the daily time frame, that is 2 time frame below will be 1 hour time frame. Your 1 hour time frame should be what? Your what is it called? Your structural movement. And then your 15 minutes or 5 minutes time frame should be your entry movement. If your monthly time frame is your bias, then your daily time frame is your structural movement. Your what? Your 1 hour chart is your entry time frame. Do you understand? If your higher time frame is 4 hours, that is your 45 minutes or 30 minutes is your structural movement. Your what? Your 15 minutes or 5 minutes or 3 minutes is your what? Is your entry uh time frame. Do you understand? So just do it like that. 2 time frame below of your bias, 2 time frame below of your structural for your entry. They will understand. So that is how the time frame goes. So you have to be able to watch after. So once you can see a break of structure on the higher time frame, just like this. Once you can see a break of structure on the higher time frame, just like this one movement itself to the upside on the higher time frame. On the lower time frame, you will see a series of higher highs, higher lows, higher highs, higher lows, all right, till it get to the extreme, which will make it exhausted. Now, if market now comes forming this low on the lower time frame, you want to see series of lower lows, lower, because on the lower time frame, it is now selling, right? It is now selling. Now, look at this. Let me ask you a simple question. Look at this. Because of on the other, this is the other time frame. Market pushed up, right? Now we are now experiencing. We are waiting for energy. We are looking for energy to take. Now on the lower time frame, we are not seeing break of structures while market is dropping, and then you are not selling. Now, does that align with the higher time frame? No, it doesn't, because the higher time frame is looking for energy, and then you on the lower time frame, you are seeing it as you've taken energy. You are looking for another what? Another lower low. You've taken energy. You're looking for break of structure. You've taken energy, and that's what you're seeing. But on the higher time frame, you are just still looking for energy. So why don't you stick to, that's how traders does. You stick to that higher time frame that is seeking for energy, and then once it has grabbed the energy, you follow the higher time frame. Then you filter all of those selling, 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 buying, buying unnecessary on the lower time frame. So this is how the time frame goes, and that is how it aligns. So you have to be able to understand all of this very well. I've explained the alignment of the break of structure multi-time frame. Now I've explained the higher time frame bias, the lower time frame execution is what we'll still talk about. Now the common mistake for every traders is that they switch from one time frame to another time frame to another. They switch to like almost all the time frame just to get the structure. You will not get it that way. I've explained it that just 3 time frame is needed, which is what? Your higher time frame bias, your structural movement, and the lower time frame execution. These 3 time frame are what makes you stand out. So you don't switch from daily to 4 hours to and then be looking for entries unnecessarily at the lower time frame. No, you switch from daily to 2 time frame below. I've just explained. If your bias time frame is daily, 2 time frame below, you focus on 1 hour time frame, and then your entry time frame will be what? 5 minutes time frame. Do you understand? Or your 15 minutes time frame precisely. So if your higher time frame is 15 minutes time frame, it means what? Your structural movement should be around 5 to 3 minutes, and then your entry time frame should be 1 minute time frame, because you are coming from 5 minutes time frame. Do you understand? So that is the mistake on that. So now we'll now move to liquidity. It's going to be another concept. This is the end of part 1 on market structure, swing high and swing low. So the next video will talk about liquidity concept. So stay tuned. Make sure you like, subscribe, turn on the notification so you will not miss any part of this video.